Hello and welcome to Credit Versio's Q&A Wednesday live for May 25th. I am your host, David Michalek, and every week at 6 p.m. Eastern Time, we come together live on Facebook and YouTube to talk about credit. And as a consumer credit expert with nearly a decade of experience, I've conducted well over 10,000 one-on-one credit coaching sessions, and I'm very much looking forward to helping you understand and improve your credit. And again, joining us today is America's #1 credit expert. He has over 30 years of experience in the credit industry, including years working for both FICO and Equifax. He is one of the very few credit experts that actually comes from inside of the credit industry. Let's welcome John Ulzheimer. John, welcome. Good to have you back.
Hi, David. Thank you for having me. I missed you last week.
Yeah. Well, almost today again, too. You had Did you do your deposition today? Was it a...
Yes, I was deposed today. And for those of you who are watching who don't know what that means, I think it was my 93rd time, if I'm counting correctly, to be deposed. And what that means is when you serve as an expert witness in federal court, in a lawsuit filed in federal court, the other side, the opposing side, so the adverse party, has the right to take your deposition, and what that means is that they get up to 7 hours to ask you questions and I'm under oath, and so I take the same oath, the whole truth and nothing but the truth, so help me God, that you would take if you were in a courtroom. Mm-hmm. In fact, my testimony today is no different than testimony in a courtroom, meaning that the either the plaintiff or the defendant can actually take the video of my testimony today, or have someone sit there and read a transcript, because there's this court reporter who's taking the whole thing down stenographically. So there is a formal record of my testimony today, and it can be read in court in front of a jury, just like if I was sitting there myself. So if, God forbid, something happens to me and they need my testimony and whatever, monkeypox, and I can't travel, then they can take my deposition transcript. So essentially what happens is that, the lawyer was very professional. He wasn't a jerk or anything. Sometimes they're jerks. This guy was not a jerk. And it was on Zoom in the chair that you see me in now. And he asked me questions for a little over 4 hours about my expert report, my professional background, the basis for the opinions that I have in the particular case. It's a whole lot of fun. But yeah, unfortunately, whenever you have a deposition, you have to give the other side 7 hours under oath, and that doesn't count breaks, doesn't count lunches, things like that. So there was an outside chance that I wasn't going to be done by 6 o'clock Eastern today. And even if I was done a few minutes ago, my brain would have been so fried you wouldn't have wanted me on it. I'd have been the worst guest you've ever had. But thankfully we got done earlier this afternoon. I'm ready to rock and roll.
That's great. Did they spend 3 hours going over your qualifications and experience?
A little bit. Yeah, this was the first time this guy has deposed me, and it's his show. He's paying for my time. He can do whatever he wants. But sometimes it's almost like getting stuck in mud and spinning your tires. You're really not making any progress. What did you do here? What did you do there? What did you do at Equifax? You're being paid for this, right? They're questions that are, all you have to do is read my background and do 10 seconds of Google research, and what my background is. And so or watch one of your videos, frankly, because we go over my background and there's little logos underneath my name right now. So it's not hard to tell where I've worked.
Yeah.
But yeah, I think we took a little bit of time to go over my professional background and where I was, kind of how much time did I spend here? What did I do there? What were my job titles at these different organizations? So I don't know how helpful that was for their case. But then we eventually got into my 40 some odd page expert report and then spent some time on my opinions there.
Right. Yeah. I've been asked about 4 or 5 times to offer expert witness testimony, and I'm like, I've told every attorney, I'm like, I don't think I would really be able to be a benefit with everything that I have going on with Credit Versio. I already have a commitment to this, but it's something that I'm very fascinated with, and I imagine telling those guys no probably burn that bridge, because I don't think they come back to you ever again. Who knows? But it's something that I'm looking forward to doing at some point. I'm not sure when, but
It
it
takes
sounds.
it. I don't know anybody that does what I do other than the people who are in the being an expert witness is not, it's not unheard of, right? People serve as expert witnesses in all kinds of lawsuits: medical malpractice, personal
Yeah,
injury, all
yeah,
types of lawsuits.
right.
I just happen to be pretty commonly used in credit related lawsuits,
Yeah,
and I can tell you that. And in your intro, you talk about how you're a credit expert who's had 10 years and has conducted X thousands of interviews.
yeah,
It's kind of like that. After a while, you earn your stripes to the point where you
right.
can talk about the topic that we're talking about today as an authoritative source. It's
Yeah,
not just, oh, I read Susie Orman's book, therefore I'm a credit expert.
right.
It's, you one of the ways that you become an expert in this on this topic, and this isn't John Ulzheimer. This is the way the court is the ultimate determining factor as to whether or not you
Yeah,
can testify in front of a jury. You can't just show up and say, "Hey, I'm an expert." That's fine and dandy. But if you remember the movie My Cousin Vinny, where
right.
The Marissa Tomei character, the Joe Pesci character, dragged her on the stand to
Yeah,
serve as an automotive expert, and she got up there and she talked in her New York accent with her New York hair, and the other attorney voir dired her, which is a process whereby the other side tries to have you disqualified, and therefore the judge is the one who may say, yes, I'm satisfied that you're knowledgeable on the topic, or no, I'm not satisfied, therefore you can't testify, or you can't testify about anything other than these one or two things.
yeah.
And so ultimately the judge is the one who determines, anybody can call themselves a credit expert in our world, right? All you need is a
That's for
Twitter
sure.
account and you write a bio. Hey, credit expert John Ulzheimer. Well, but when a judge says you're an expert, that's a very different level
Yeah,
of authenticity. And so
yeah.
that, even though it's a lot of people try to do it, it's this is a it, let's put it this way: the pretenders are sniffed out very, very quickly, and all it takes is to get disqualified at the federal court level once or
Yeah,
twice, and then you
and
never
you're
see
out.
some of these people again. Yeah,
Yeah, yeah, you're out.
yeah.
Well, and just for everybody watching, and John, I know you already know this, but if you ever have a question whether or not somebody's really a credit expert, just ask them. Go, hey, how many times have you been asked to offer testimony, or to write an expert witness report? Because if you've been in this business for a few years and you haven't, chances are the attorney that looked at retaining you probably went through your credentials and figured out pretty quickly that opposing counsel is probably going to have their way with you, or that you're going to be, like you said, sniffed out pretty fast.
Yeah, there are a few standards in the federal rules of civil procedure as it pertains to experts. Saying you're an expert does not make you an expert.
Yeah,
You can be an expert through education. You can be an expert through um, research, and you can be an expert through work experience. And it doesn't really matter. But if you have somehow obtained what's called specialized knowledge on a
mm-hmm.
certain topic, and it doesn't matter how you got it, if you've obtained specialized knowledge on a certain topic, then that is one of the hurdles that you have to hop over in order
Yeah,
to be able to testify in front of a jury in federal or state court. And after a while, it's almost like a snowball. After you've done it a few times, you can lean back on the fact that other judges have qualified you as an expert
yeah,
as why you should be qualified as an expert again. So after you've been
yeah,
qualified a few times, it's almost like no judge wants to be the first that says, well, these other 70 judges have qualified. I just don't believe them, right?
right,
It doesn't really make sense. So,
right, right.
but really it's a matter of getting through the first one or two chances. And then really, you kind of have that stamp of authenticity. and your phone and your email is going to be blowing up because there's a lot of work out there in my world.
Yeah, no kidding. All right, well, that's great to hear that, and we got a couple of familiar faces. Deji is back. Deji, if you want me to post your question, you got to really shorten it up. We got to be able to put it on here that is, or maybe you're just making a comment, but see if you can, do a Cliff Note version of that. Mike, was John wearing his Credit Versio shirt while getting deposed?
I will show you. Hold on. Y'all think I'm kidding. Watch.
Here we go.
That's what I was wearing. I was wearing my top and my gym shorts. My dress shirt and my gym shorts.
Yeah, that's fancy for John right there. Okay.
That's so how we roll. That's how we roll at the torso. At the torso level, that's how we roll.
So before we get rolling the subject here, keep in mind today that we're going to have a few subjects that John and I are going to talk about. If you have some questions, just jump in there. We're not sticking to any schedule very strictly. The only thing that we ask is when John is joining us, we don't really talk about credit repair. This is more credit education. If you do have credit repair questions, you can post them here. I won't put them up on the screen. I will swing back around and answer them later on. So let's just stick with asking questions about credit. So John, I actually was kind of inspired earlier today. I had a few questions that I wanted to go over with you that I thought maybe the audience would really like. And I do want to get to that last one because I think that's going to be a real important one. But the first one I want to talk about, and again, I invite everybody to post their questions if you have them. They don't have to be on topic. The first one is, what should I know before requesting a credit limit increase, and under what circumstances should I get one or not get one?
So, okay, yeah, that's a good one. So it's a lot of moving parts there. So obviously a credit limit increase is when you ask your credit card issuer to augment your buying power by increasing your credit limit. Generally, people do this for a couple of reasons. Number one is you have more buying power. Number two, it's pretty well known in the credit world that the lower your balance is relative to your credit limit, the lower your utilization ratio is, and the higher your credit score could possibly be. Obviously, one of the ways to do that is to pay down your balances or have much higher credit limits. And so that's one of the kind of credit scoring benefits of having a higher credit limit. Now, keep in mind when you contact a credit card issuer, to your credit card issuer, to ask them for a credit limit increase, you need to keep two things in mind. Number one is you may be asked why. Like, can you justify your request? And if you've got a credit card with a $10,000 credit limit and an average monthly balance of $200, do you really need a credit limit increase? It's not like you're maxing your card out regularly where a credit limit increase would be a legitimate, tangible benefit to you. So number one, be reasonable with your request in that respect. Number two is, unless you don't care, be careful, because sometimes asking for a credit limit increase is considered an application for credit. Yeah. And here's the scenario. So if you have a credit card with whatever credit limit it is, and you call the credit card issuer and you ask them for a really meaningful increase, a 50% increase, a 100% increase, something that's really it's a different product is what you're asking for. Essentially, you're not asking for a card with a $5,000 limit. You're asking for a card with a $10,000 limit. That's kind of a different product, right? So there's a possibility that when you make that request of the card issuer, they're going to want to pull a credit report and do an underwriting on you. And if you're okay with that, then fine. If you're not okay with that, then you probably want to ask them for something much more kind of minimal. And most credit card issuers, assuming that you're a good customer and you're not constantly late or that you're in some stage of default, most credit card issuers, the frontline customer service people, do have some flexibility and are able to offer you some modest amount of a credit limit increase without actually going in and doing a full-blown underwriting of your account. So again, if you don't care about them pulling your credit report, then ask for whatever you want to ask for. But if you do care about that, you might want to just clarify up front, hey, are you going to pull my credit in response to this, to my request, or is this just something you can handle based on just our historical relationship?
Got it. Now, what do you mean by, because I've never heard it phrased quite like that, but it makes a lot of sense. What do you mean by if you're asking for a meaningful increase, 50%, 100%, that might be a different product? Are you talking about like maybe Chase has a certain card that they approve for this group of people, and then it's a different product if you're talking about a much bigger increase or a much larger line of credit?
Exactly right. So if you have a
Okay.
if you have a credit card with a $X thousand limit and you want double that credit limit, they may not even have that credit limit on the particular type of account that you have with them. So you may be
Yeah.
asking for, what you're essentially asking for kind of accidentally is you're really asking, hey, would I qualify for that other card that's on the shelf? And if I can, I'd like to try to qualify for it. So that's what I mean when I say that you may be actually, when you're talking to them, your request may essentially indicate that you're asking for a different product with the card issuer versus a higher credit limit, but higher within the boundaries of the current product that you have, where it's less likely that they're going to do a full blown underwriting versus if you are asking for something that essentially means a different product with them.
You know what? That makes so much sense because when I about a decade ago, when I went through my rebuilding process and getting my credit back on track, one of the first cards I got was a Chase. In fact, I still have it. It's like the bottom basement Chase card that I could get, and I think they gave me $1,000 credit limit. Then like a year or two later, they bumped it to 2,000. And they never changed it at all. It's still 2,000. Meanwhile, my Cap One card is almost 15 times that, and so are all of my other cards. But that one's right at 2,000 and doesn't budge. Not that I've ever called them or asked for a bigger limit, because what do I need that for? But
Sure.
it's funny that having this conversation, if I go inside of my app, it says, "Hey, you are pre-approved already for 20 something $1,000 on a different Chase card. All you have to do is just click this, then click this, and then we'll approve you." I'm like, oh, I wonder why they just don't do that on this card, but that makes sense. I'm not a credit card expert, as all of you can
Different
see.
product. And by the way,
Different product.
just because you're pre-approved doesn't mean that A, you're going to get it, or
Sure.
B that they're not going to pull your credit report. That's really kind of the contemporary version of the offer that's probably sitting out in my mailbox right now. Hey, you've been
Yeah.
pre-approved for this product with a credit limit of up to whatever, and the minute
Right.
you send that back in, believe it or not, you're actually formally applying for credit with them, and you're giving them permissible purpose to do a full-blown underwriting, which would include an inquiry and because of the credit pull. And they're required by the Fair Credit Reporting Act requires them to make you a firm offer of credit. And if it was an insurance company, they'd have to make you a firm offer of insurance. So
Mhm.
unless you filed bankruptcy this morning, then you're likely going to get something from them. But it's not necessarily the same something that's taking up the marquee space on
Yeah.
the advertisement that you're seeing.
Right. Right. Makes sense. Before we go into part two of that question, we got a question from Deji. What do I need to do to get my FICO score up? Because I made it to 750 in TransUnion and Equifax, but 697 for FICO score. Okay. Deji, I don't know where you started from, but that it sounds like you're doing okay.
Yeah, 750 is solid.
Yeah.
So I assume we're talking apples to apples here. So we're talking FICO to FICO versus FICO to Vantage Score or some
Yeah,
other.
I think that's what he's talking about. Is he's got a 697 on his Equifax and 750 on TransUnion.
Oh, okay, all right. Look, there's a 697 is about 20 points below the national average. 750 is considerably higher than the national average. So, without even looking at your credit reports, it's highly likely that there's something that is either on your Equifax credit report that is not on your TransUnion credit report, or if it is similar information that there may be something unique about the status of one of the items or the balance on one of the items that is different on your TransUnion report. That's the only, without sitting there and comparing your credit reports side by side. That's the best I'm going to be able to do. It's kind of hard to triage score difference like that without actually going through and looking at the credit report. But that's a meaningful enough difference. That's a 50 plus point difference in score that I don't think you can just chalk that up to, oh, maybe a different version of the FICO score that's causing that considerable amount of a score difference. And that kind of transcends the line between, I mean, no one would look at 697 and say that is an elite credit score, because it's not. But people will look at 750 and say that is an elite credit score. That's an excellent credit score, because it is. So you're really transcending, if we were talking the difference between an 820 and an 810, I'd be like, dude, come on. Or if we were talking the difference between a 580 and a 590, I'd be like, dude, come on. They're the same thing, right? Yeah. But there is a meaningful difference between 750 and 697. That transcends a variety of risk tiers in auto lending and mortgage lending, credit card issuing. And so that is in fact a meaningful difference in the score. And so there has to be, and credit scores are all data driven. So that means that the data has to be different.
Yeah. Deji, just a quick story on my end. When I was rebuilding, it took maybe about a year to go from where I was, which was mid fives. I publicly admit and talk about my how I got into this business and my credit issues. But it took me like a year or so to get into the low sevens. But it took me another 2-3 years to get into the high sevens and low eights. So sometimes it's just time. It's just doing good stuff and making smart decisions over a period of time.
You know what it is? Let me give you two analogies that are going to make sense. Number one, if you're grossly obese, it's really easy to lose the first 10 pounds. Okay? It may be really easy to lose the first 50 or 100 pounds, but those last 50 pounds are really, really, really tough. Another example is if I had a rubber band, I'd sit here with a rubber band and I'd start spinning it. The first 3 or 4 spins are really, really easy, but it gets to a point where I can barely twist it because it's already so tight. That's the same thing with credit scores. It's not hard to turn a lower score into something a little bit higher, but where you want to get to the 750s and above, where you're really maxing out on a lot of the metrics, that's where it becomes much more difficult, and it's really, really hard to lose that last 10 or 15 pounds.
Yeah, very well put. Okay. Hey, Louis back. Good to see you. Okay. Mike, not sure it's been asked. He wants to know if you think that credit unions are friendlier than regular banks. I guess, I don't know, do you need some context for that, or is that just an easy question to answer straight up?
I love credit unions. I have relationships with 3 credit unions. Mortgage with a credit union. I have 2 money markets and a savings account with another credit union, and another money market with another credit union. You're probably, and a deposit account with, actually, that's 4 different. You're probably wondering why? And the answer to why is, I don't know, this is probably just me being a little bit too conservative, but you've probably heard of the FDIC insurance of deposits less than $250,000. Well, I figure if I have a bunch of those, they're all going to be insured, rather than having one gigantic deposit where a portion of it is insured, but a portion of it is not insured. So I'm a 54-year-old guy who's been around for a while, and so I have it spread out because CUNA, the credit union the CUNA has a similar insurance on deposits for credit unions as the FDIC has on deposits with banks. So I love credit unions. And number 2 is they do seem to make local decisions more frequently on credit applications than a large national bank would make. So in other words, if you were to apply for a credit card, if you were to apply for a credit card with a large national credit card issuer, the decision about your application has already been made by a person you'll never meet in a state where you're never going to visit. So it's all automated, it's all predetermined, and the only thing missing is your application and your credit information. Credit unions don't necessarily operate like that. You tend to have more of a kind of a committee approach to underwriting, and it's not impossible to get overrides if denials are made. The only thing to keep in mind about credit unions is I think all of them are nonprofit, where banks are for profit. And if you defaulted on a $20,000 credit card with Capital One, that's an immaterial rounding error to them. If you defaulted on a $20,000 credit card with a credit union, someone's going to lose their job at the credit union. So they tend to be a little bit more conservative in that respect, meaning that it's certainly not entirely unheard of, but you're less likely to get the gigantic loan amounts and the gigantic credit limits on credit cards versus someone like a gigantic bank where that's not unheard of at all.
Makes sense. All right.
But if you're going to use a credit union to build credit or rebuild credit, the one thing you should keep in mind is, and this is less of a problem today than it was maybe 15, 20 years ago, you're going to want to make sure that the credit union you're working with does in fact report to all three of the credit bureaus. There was a time when credit unions would only report to one or maybe two of the credit bureaus because of regional, not all credit unions are national, right? I mean, Navy Federal is national, but they're the exception to the rule. Most credit unions are very, very local to either a state or to a small part of a state. And because of that, you don't necessarily see credit unions needing to have accounts with all three of the credit bureaus for the national coverage aspect of it. But so if you are in fact trying to use credit union relationships to rebuild credit, just make sure that whatever it is that you're applying for, that they are going to report to all three of the credit bureaus. Otherwise, your credit rebuilding journey is not going to be as quick, simply because it's like the tree falling in the woods. If you've got a credit card and only one credit bureau knows about it, then the other two credit bureaus don't, and no one cares about it.
Yeah. All right. So, hey, shout out to Dave and Credit Versio. Thanks, Supreme Classic. I appreciate that. TD says, if I want a civil case versus a creditor, are they required to take that account off my credit report? It's a good question.
So if you won a civil case, that means that you sued a creditor, it went to trial, and a jury rendered a verdict. That doesn't necessarily equate to a deletion from a credit report. If you sue a creditor and you enter into a settlement agreement, certainly one of the terms of the settlement agreement, in addition to the finance component of it, could be that you agree as the lender to ask the credit reporting agencies to remove the account from your credit reports. In my experience, and I've been involved in an awful lot of these, a lot of the time, not all of the time, but a lot of the time, just out of an abundance of caution, the lender will proactively remove the offensive trade line or the offensive account during the litigation process, just as a matter of being careful. That doesn't always happen. I've had plenty of cases where the creditor is hell-bent that they are reporting accurate information and they are not going to remove it because they feel that what they're reporting is correct. But again, it's not uncommon that they will remove it during the litigation, even before a settlement. And then certainly as part of the settlement, it's very, very common that a plaintiff is going to ask for a deletion.
Yeah, it looks like, just to put this up for TD, this went in a little bit of a different direction. So they were sounds like maybe it was an original creditor or a collection company that took you to court. Because we need to know a lot more.
It's probably, normally when something like that happens, it's either a debt collector or a collection attorney.
Yeah. Said it couldn't prove it was his account. So.
Yeah, John, obviously that's an issue, right? Because one of the rights that we enjoy is not only accurate information, but the information has to be verifiable. Yeah, so you're talking about a debt buyer.
Yeah.
So a debt buyer is essentially the new creditor, even though you probably have never heard of them. But when a debt buyer purchases a defaulted debt, then they're the new creditor. And certainly if they can't validate the ownership of the account, then they have to remove it. You have to be able to verify that as part of your obligation to the Fair Credit Reporting Act.
Um, we have a post here that I can't put up. Marin, I do see your question. Because John's with us, we don't do credit repair questions on these lives, but I will swing back around and answer that for you. It's a really great question. I do want to take care of that for you. Timothy says hello. Okay, so let's get to that second half of the question. When we're talking about, let's go from asking for an increase to applying for credit. Is my current credit limits on my card, are they going to affect what I get with future credit cards?
Uh, it, they certainly could. So number one, they're influential to your credit scores, and certainly your credit scores are going to be influential to a decision that a lender makes. And so, in that respect, certainly yes. Number two,
Let's say, just using my example before, let's say that I'm rebuilding my credit. And this is specific to a lot of people who are using Credit Versio. Probably went through a bad patch. They're getting on the right path of good credit. Sometimes they're not necessarily credit invisible for a while, but they just don't really have anything active. They get a secured credit card for $200-300. They ride with that for maybe 6 months or so. What's that progression look like in your opinion? Like, if they go try to, like, for example, what I did, and get a Chase card and they get a $1,000 credit limit. How does that progression usually take place when somebody's trying to go from little secured cards into getting something a little bit more usable, a little bit more respectable as far as a credit limit?
yeah. So it depends on how bad your credit is to start with, right? I mean, if your credit reports are polluted with negative information and your credit scores are just god awful, then you've got a multi-year journey ahead of you that is going to
Yeah,
include secured credit cards, subprime credit cards, and just limited access to mainstream funding because of the poor credit. Um, but obviously, we know that there's a time limit on how long that stuff can remain on a credit report, and to the extent that you're not repolluting your credit reports with new bad stuff, and so even though this stuff has a 7-year limit, you've got so much of it that's new that you really never ever enjoy the full benefit of the 7-year limit, because you're constantly adding new bad stuff because you don't know how to manage credit properly. But let's just say, for argument's sake, that you have seen the light and you've committed to managing your credit properly, and you kind of draw a line in the sand and you say, that's it, I'm never going to miss a payment again, damn it, I get it, I'd rather have high credit scores and low interest rates than low credit scores and high interest rates, and bad options. So you draw the line in the sand, and what's going to happen, even if you did nothing, just organically your scores are going to start to improve after a year, because that's one of the thresholds in credit scoring systems that the metrics that determine that consider the age of your
yeah,
derogatory accounts. And the more time you put between yourself and the event, the more your scores are going to recover. And eventually, even though these items are still on your credit reports, they're going to be almost immaterial to your score. And so you're going to end up with really good scores along with really old derog
yeah.
information. You may actually confuse you as to how in the world do I have a score this high when I still have this stuff in my credit report. And it's because the stuff is so old that
Right.
it's almost empirically meaningless at that point. But if that's the journey that you're going through, then you are going to go through this kind of chronology of bad credit accounts that are going to get better over time, but in a very kind of gradual way. So you should not expect going from a $300 secured credit card to a $35,000 unsecured credit card. That's very unlikely to
Hmm.
happen unless there's just an extenuating circumstance that we haven't considered. What you're likely going to see is secured credit cards, maybe retail or petroleum credit cards that have low credit limits and really high, because retail store credit cards are basically subprime credit cards. They've got low credit limits and high APRs. They may have a store
Yeah.
brand on it, but who cares? If you've got a $500 credit limit and a 29% APR, no one would argue that's not a subprime credit card,
Right.
even though you may be able to buy lumber and plumbing with it. So then eventually, when your scores start to creep up and up, you're eventually going to start running into credit card issuers who do have more tolerance. Cap One is a really good example. Cap
Hmm.
One initially, back when they became Cap One many years ago,
Oh yeah,
they're a subprime credit card issuer,
I
and they
remember.
did this primarily with people who have bad credit. They're not
Hmm.
just a subprime credit card issuer anymore. They have really good prime products
Yeah,
with competitive APRs and really high credit limits, in addition to their stable of more subprime products. And so it wouldn't be unheard of to see someone like a Cap take a leap on someone who did have bad credit at one time and then give them a $5, $10, $15,000 limit. And once that starts happening and all the rest of that bad stuff falls off your credit reports, then it's Katie bar the door, because credit card issuers are going to be throwing money at you, especially if you've got really good credit scores and you have a lot of good credit card usage, a history of credit card usage, because that's a profitable customer, someone who uses credit cards a lot, carries a balance, but doesn't default. It's a very
yeah.
profitable card user. And so as soon as your credit reports start to indicate that that is your profile, that's when the sharks are going to come to eat.
So when they're looking at your, say you're in that middle area where, let's say your derogatory credits maybe a year, 2 years old, you've got a couple of secured cards, maybe a retail card like you were talking about, and so this is really sort of a two-part question. Um, when you apply for bigger and better cards like Cap One, for example, are they going to look at how much weight do they put into the limit of the cards that you've had in the past? Like, say I've had nothing more than $1,000 credit limit. Um, do card issuers say to themselves, well, we don't want to be the first ones to jump them up to 5 or 10,000? So that's the first half of the question. The other half is, how much of a role does the credit limits on authorized user accounts play? So let's just say I've got something that's really off balance, like I'm starting to rebuild my credit again. I've got a couple of secured cards for a few $100, a retail card for 500, and maybe I got a new Chase card that's 6 months old, but I've got my spouse's or my brother's card on my credit report. I'm an authorized user, and that's $25,000 or $30,000. Does that actually play any role in the lender's decision, or do they look at an authorized user as, well, he didn't really earn that credit limit, he's just piggybacking?
Yeah, and that's kind of becoming a more what's the word I'm trying to find here? That's becoming a topic that is starting to gather more and more momentum and attract more attention. Is what is the real nature and the real value of being added as an authorized user
Yeah.
in scenarios where there is kind of an authentic or explainable relationship between the two parties versus one where there isn't, which I think most people would refer to as piggybacking, kind of as a pejorative term. Certainly FICO caught notice of that many years ago and has added logic to their scoring systems to devalue what they believe to be the non-authentic relationships between authorized users and the primary card holder. So that's number one. Number two, I believe that Fannie Mae in their manual underwriting standards even has language, and has had language for many years, that also kind of as a policy devalues authorized users. And certainly, even though Fannie Mae is not really what we'd call a prototypical lender, they do act like a lender, and lenders can certainly have their own policies with respect to how they want to consider authorized user accounts. But to the extent that you have a $30,000 credit limit on a credit card and FICO's systems consider it in full, then you're going to get the entire value out of the aspects of that particular trade line. The $30,000 credit limit, whatever the balance happens to be, whatever the age is of the card.
Yeah.
If it's never been late, that's also going to be considered. But you may run into scenarios where you have all this stuff all over your credit report and your scores aren't as high as you think they should be. And one of the reasons could be that you're running into a scenario where FICO's logic is kind of throttling back the benefit of being an authorized user.
Yeah, that makes sense.
I've said it 100 times, and I'm going to say it 101st time. I love authorized users. I established credit as an authorized user on one of my father's accounts. My son is an authorized user on one
Yeah.
of my credit cards, and I haven't checked his credit reports, but I suspect that it's on his credit reports as the only thing on his credit reports. And so in my mind, it is a valid process by which people can use to build credit. It has been written about for decades as being a credit building strategy. If you Google 3 ways to build credit, you're going to find 10,000 articles that people have written over time, and one of those is highly likely to be becoming an authorized user on someone else's credit card account.
Yeah, definitely. Okay. Sean asks, how do you thicken up a credit report? I think we touched on that a little bit, but John, if you've got more to add to it, please do.
Yeah, so I love that question. First off, I love the terminology. I'm fixing to thicken up my stomach after this call. We're going out to dinner.
Nice.
Last day of school, and the deposition's over. So it's a lot of good things happen
Excellent.
today. So maybe in addition to the how, let me kind of answer why this is important. So the reason it's important to have a quote unquote thick credit report is credit scoring systems, they don't necessarily penalize you for having what's referred to as a thin file. And a thin file is generally a credit report that has 1, 2, or 3 trade lines. That's generally considered to be a thin file in FICO's scoring systems. And if you've got a thin file, it doesn't mean that you've got bad credit. It just means that your upward mobility is capped. So even though the published range of credit scores is 300 to 850, there are certain consumer profiles, certain types of credit reports that cannot, as a matter of systemic boundaries, cannot score 850 because you don't have the type of credit report that can score an 850. And the thin file is a great example of that. In addition to having a thin file, and look, this is a generality, and I realize that this is not going to be universally accurate, so don't jump on me on Twitter and rip on me. But people who generally have thin files are going to be younger people who are just starting out with credit. And it's highly likely then, in addition to the thin credit report, you're going to have younger credit reports. So you really have 2 things going against you: is the thickness of the credit report, to use Sean's word, and also the age of the credit report. So you really have a couple of things working against you. So it's important to do what Sean is asking about, which is to build a more voluminous credit report, and that means opening more than one account in the history of your life. So you have people that kind of suggest living off the credit grid because credit is evil and credit card issuers are the devil, which is all bullshit. But that's what happens. That's the product. Is if you do those types of things, if you pay cash for everything, or if you just live off your debit card, well, then you're not going to have a credit report because you don't have credit. And then someday when you go to apply for a mortgage loan or a car loan, and you all of a sudden hypocritically want credit, you're not going to be able to get credit, or you're not going to get it at the advantageous terms that other people have been able to get those types of extensions of credit out. So you definitely want to have enough credit so that you don't fall into the thin file range, which means you have to have at least 4 accounts. And look, you can have 4 secured credit cards if you want. I think optimally over time, you'd like to have a bunch of unsecured credit cards. You'd like to have a history of mortgages, a history of auto loans. If you're a student and you have student loans, then you don't have a thin file because you probably have more than 3 student loans. And so you may accidentally have thickened up your credit report just because you have student loans. A lot of people don't realize that student loans report on a disbursement basis, not on an education basis. And so if you've gotten 3 or 4 disbursements during your time in school, that's 3 or 4 different loans. Even though you may only make 1 payment a month, those are multiple loans. And so those are all reported independently as disbursements on credit reports. So really, it's just a matter of compiling a history of credit. And you don't have to do it with credit cards. You don't have to do it with auto loans. You just do it with a variety of different types of accounts. And look, over time, this becomes a distant memory. I can't even remember how many decades ago I had 1 or 2 or 3 trade lines on my credit report. It was probably high school, which is 4 decades ago. So this will become a distant memory someday. I can promise you that.
Yeah, Sean made a critical post here. It says credit report age is less than 2 years. So that would
Yeah.
explain it.
So that jives with the whole thickening up question is the people who have thin credit reports. And if you've got a thin credit report, your credit score is also much more volatile. So we talked about this, David, I think
Yeah.
maybe in a prior Facebook Live, we talked about kind of the natural and expected organic score migration over time and
Yep.
how it's actually expected that your score is going to kind of act a little bit like an EKG and go up and down over time as the information on your credit report changes, which happens every month, right? Your credit report is different this month than it was last month. Everything is a month older, so it has to be different than it was last month. And the volatility of a thin file and a young file is very, very different than the volatility of someone who's had credit for many, many decades. I'll give you a fantastic example. If you've got, one trade line and that trade line is 10 years old and you go out and you open a brand new account, you just went from having a 10-year-old credit report on average to a 5-year-old credit report on average because you just took a brand new account with zero time and added it to a 10-year-old account and you divide that by 2 and boom. So, and your score may have gone down as a result and confused you and you're wondering what the heck's going on. Well, that's the product of having a thin credit report, is because your scores are much more volatile because the changes are much more meaningful. So it's like for those of you who went to college and you kind of tracked your GPA through a semester and you see that the more and more tests you take, the harder it is for you to improve your score because you have so many tests that you've taken. So you have what they're called observations. You have many more observations versus the change in your GPA after the second test from the first test versus the 15th test. So it's the same thing in scoring systems, is the more observations you have on a credit report, the more stable your score is going to become. It's still going to change month after month. If it doesn't, then there's something dreadfully wrong with the scoring system that's being used. But it should at least fall into a more predictable range versus if you've got a thin file or a young file.
Excellent. Scott's got a great comment. I've been working on my scores using Credit Versio and using credit intelligently thanks to your advice. That's great to hear. Today, one of my cards doubled my credit limit. Of course, I don't plan to ever use more than 30% of my available credit. Takes time. Scott, well done.
That's a big deal, dude. Congratulations. These are the stories that you don't hear very often, but I love to hear them. Everyone likes to bitch and whine and moan about their low credit scores, but man, oh man, I love hearing stories like that. It's a not to single you out, Scott. That's not what I'm trying to do. But FICO did a study several years ago. I think it was called High Flyers or Shooting Stars or something like that. And if you Google it, you may be able to find it. It's probably still somewhere out there on one of their websites. And what they did was they analyzed people who have very, very low scores and people who have very, very high scores. And they analyzed how those people's credit management practices changed over time and therefore how their scores changed over time. And the percentage of people who had what they call the shooting stars or the high flyers, the percentage of people who have those types of credit scores, the percentage of them who kept those scores over time is extremely high. It's very, very unusual that you see someone go from an elite level credit score to like a 580. And the flip side, unfortunately, is true as well. So for people who have these really, really low scores, unfortunately, they tend to stay low over time. And so it's hard to become kind of a shooting star, is what they call it, when you have these really, really low scores. And so number one, to find someone who has a real life example of going from, first off, the fact that you're trying to do this is commendable, and I congratulate you. Number two is the fact that you have now experienced the practical benefit. We always talk about, if you've got good credit, you're going to get bigger loans and lower interest rates. Well, duh, but you've actually experienced that first person. And so now it takes what we tell you every single week and kind of add some legitimacy to it, because now you're like, oh yeah, these idiots on Facebook are actually correct about what they keep telling me week after week about the practical benefit. The doubling of the credit limit is very unusual. So that's a big deal.
Yeah.
That's a huge
Yeah, yeah,
you should that's a huge gold star on your resume for that one. And number two, the fact that if you I don't know what your credit history looks like, but the fact that you went from wherever you were to something high enough to where you have lenders doubling credit limits means that you have in fact broken free of what that score range that so many people have a hard time breaking free from. So Google it. It's like FICO's high flyers or FICO high achievers or FICO's shooting stars, and they actually published a study of the trends of those people over time. And it was really unfortunate to see how many people who have low scores just kind of keep them, and they never really
yeah,
benefit from low interest rates and competitive offers.
yeah, yeah. Well,
And
John,
if I can find it, David, I'll send you the link to it. And then
yeah.
if you want to post it in
Oh, for
the
sure.
credit Versio, yeah.
Yeah, yeah. I would love to. And again, we are at the fastest 50 minutes of the
Man,
week.
this goes
That
fast.
flew. That flew. Okay, well, I'm going to let you enjoy the day now that you finished your deposition, last day of school. I know you got dinner to go to. So everybody, thank you so much for joining us today. Great questions, great interaction. Really appreciate it. And John, thanks again for your advice and your information. As always, very valuable. And we will see you next time.
All
Thank you,
right.
guys.
Thanks, David. Okay.
Take
Bye,
care.
y'all.